At the Hartford Area Development Corporation, we are committed to your economic growth. Where our existing companies have an opportunity to grow, we are here to help you get there. Becoming an active strategic exporter can have a big impact on your valuation. The classic way an investor places value on your company is to calculate EBITDA, which is earnings before interest and taxes, depreciation and amortization, and apply an industry multiple to that EBITDA. The two things that matter are the size of the EBITDA and the size of the multiple. Exporters have an impact on EBITDA. Top-line revenues drive the EBITDA. In the previous video, we showed how exporting provides a more robust revenue growth. That means a bigger EBITDA. But it's the margin on that revenue which determines the growth in EBITDA. As it turns out, when you export, you lift margins. Two things drive that. Initially, you'll be selling the same products you currently produce. You may tweak them for regulatory reasons, but essentially you're leveraging your existing capital and labor resources. That boosts efficiency. Second, when you begin to export, you tend to be risk averse, and this caution makes you look for markets where you can get a premium price. That higher price, placed on top of flat cost base, makes margins go up, which drive a higher EBITDA. The other factor is the multiple. It too is impacted by exporting. Earlier, we showed how exporting causes revenues to grow faster, to be more predictable, to be more sustainable. That reduces market risk, which is a key factor in determining the multiple. Exports can cause the multiple to go up. In our example, the multiple goes from a standard 4 times to 5 times EBITDA. If you take two similar companies, each one with $5 million in revenue, one does not export, but the other does. The non-exporter has an EBITDA of $1 million. The exporter has somewhat better margins and thus has an EBITDA of $1.2 million. When we apply the 4 times multiple for the non-exporter to the $1 million in EBITDA, we get a valuation of $4 million. With the reduced market risk, the exporter enjoys a 5 times multiplier. Multiply that by the $1.2 million EBITDA, and you get a 50% lift in valuation to $6 million, just for expanding your markets into a couple of foreign countries. In the next video, we'll show the surprising impact exporting has on competitive advantage. The Hartford Area Development Corporation can connect you to all the great resources that can help you develop an export strategy or expand your existing exporting activities. Call us now.